As June trading kicks off, the ETF space is on pace for $1 trillion in inflows overall this year, despite all the market turbulence. So where is that money likely to keep going? Joining me now is Jay Jacobs, the U.S. head of equity ETFs at BlackRock, alongside Nate Geraci, the president of the ETF Store. So first off, gentlemen, thank you very much for being with us on the ETF Edge. I want to start things off with a talk about some of the momentum that we've been seeing amid the general market uncertainty. Despite today's kind of cooling off, last week we saw the iShares Momentum ETF, the ticker MTUM, hit an intraday all-time record high, going all the way back to inception in 2013. Jay, you're probably in a very expert position to tell us a little bit about what's going on here, since it is an iShares product. So maybe take us through the rationale for why we are seeing this move higher, specifically in the momentum factor, and then why it is maybe that investors are keying more on some of these factor ETFs.
Well, I think in the simplest terms, we're in a momentum-driven market right now. If you look across the various different academic factors, momentum has been performing the best this year. MTUM is outperforming, the S&P 500 by about 10% and is strongly up this year in a relatively flat market otherwise. So momentum at the single stock level is working. There are companies across the economy, across various different sectors that are exhibiting robust momentum, and MTUM has been able to capture that robustness. So I think even despite some of the uncertainty in the markets and despite some of the wavering in markets in April, still those strong momentum names have really carried through in their performance throughout the year, and that's really helped drive performance for the product.
You know, Jay, it maybe goes without saying for some of the kind of, big fans of CNBC, the experts out there who watch the markets on a daily basis, about where some of the momentum really is. But maybe just for the record, from your standpoint, as you look at this MTUM and other momentum-based factor ETFs, where is the momentum specifically in the market right now?
Well, right now, if you look at it through a sector lens, some of the most momentum is being felt in the financial sector, where we have a significant overweight versus the S&P 500, and also in the consumer staples space. So, you can try to tea leaf a little bit around maybe there's some concern about economic growth and a little bit more defensiveness with consumer staples, maybe persistent inflation and expanding margins is a positive in the financial services sector. But again, this is happening at the stock selection level. Where we are looking at, for MTUM to allocate is the stocks that are exhibiting the most momentum. So it's names within those sectors that the ETF is picking to drive performance.
All right. Now, Nate, as you kind of look big picture at just how some of these factor ETFs, specifically momentum type names, factor in, are there at least signs right now that investors, generally speaking, are gravitating more towards momentum as a serious factor for their allocations, only because momentum in some way, shape, or form has been a massive upside tailwind for some of these types of companies and types of sectors, going all the way back, arguably, to the great financial crisis and the recovery from there?
Well, it's interesting because if you look at the iShares Momentum ETF, that has fairly substantially outperformed the S&P 500 since its inception in 2013. And that's obviously impressive alone when you consider what the S&P 500 has done over that time frame. But to what Jay was saying, if you look here more recently, a decent chunk of that outperformance has come really since the broader market recovery that began in early April. And I think very simply, it's obviously been a much more risk-on environment since then. And momentum stocks tend to do well in that type of environment. And I thought Jay said it well. If you look under the hood of MTUN and see what's performing well, it's financials, it's technology. Both of those sectors have really surged since the tariff tantrum earlier this year. So I just think investors right now are comfortable piling into the stocks that have worked recently.
All right, so it's a kind of a trend-driven philosophy here, one where the trend is your friend, perhaps until it's not. Nate, do you see this kind of momentum continuing for the momentum factor ETFs?
I just think there are a lot of variables in the market right now. Clearly, the tariffs and trade are front and center, but you have stocks historically elevated from a valuation standpoint. There's still some concerns over what the Fed will do, what's the direction of interest rates and inflation. I think all of that plays into a little bit of a wait and see attitude from investors overall. But like I said, I think when things are working, investors are comfortable continuing to do what has been working, and that's what we're seeing out of momentum.